The cryptocurrency markets received some very positive and bullish news in regards to cryptocurrencies as it's viewed by regulatory committees. And Jake Clayton, Christopher Giancarlo testified today, and here is that portion of the testimony.
That might make sense if this were an isolated incident, but the banks in question have something like 68 violations over the last 10 years, so it's very, very serious. Too often we see big banks pay fines and move right along with little contrition and, frankly, no serious punishment. Recidivist violators won't stop breaking the laws if your agencies serve as sanctuaries. I've raised the issue of waivers over the years. I'm disappointed in your unwillingness to pursue every avenue available. It's clear that virtual currencies bring us into a new age, but that doesn't mean we overlook the basic principles of going after the bad guys and being tough when they are repeat offenders. Thank you, Mr. Chairman.
Thank you, Senator Brown. Now we will turn to the testimony of our witnesses, and first today we will receive testimony from the Honorable Jay Clayton, Chairman of the U.S. Securities and Exchange Commission. Following him, we will then hear from the Honorable Chris Giancarlo, Chairman of the U.S. Commodity Futures Trading Commission. Gentlemen, again, we welcome both of you here. We appreciate you coming to share your knowledge and understanding on this issue with us. And Chairman Clayton, you may proceed.
Thank you. Chairman Crapo, Ranking Member Brown, distinguished senators of the committee, thank you for the opportunity to testify before you today on the important topic of cryptocurrencies, initial coin offerings, and related trading activities. The total market capitalization of all cryptocurrencies was estimated at $700 billion earlier this year. In 2017, ICOs, initial coin offerings, raised nearly $4 billion. These markets are local, national, and international. Today I will attempt to level set where we stand from a market regulatory perspective. My remarks may be viewed by some as overly simplistic, but they reflect how I present these issues to Main Street investors. For ease of analysis, I break this space into three categories. First, a promising new technology referred to as distributed ledger technology or blockchain. Proponents of this technology assert that it will bring great efficiencies to our national and global economies, including our capital markets. I hope that it does, and the Commission looks forward to working with market participants who seek to bring efficiencies, including more effective oversight, to our markets. The second and third categories are cryptocurrencies and ICOs, which are subsets of the products seeking to take advantage of the commercial opportunities presented by blockchain technology. One is promoted to be a replacement for dollars. The other is like a stock offering. Cryptocurrencies. Some of the more widely known cryptocurrencies were introduced as substitutes for traditional currencies, such as the US dollar or the euro. Those who promote these so-called virtual currencies have asserted that they will make it easier and cheaper to buy and sell goods, particularly across borders. They have asserted that transaction and verification fees and costs will be eliminated or reduced. To date, these assertions have proved elusive in many areas. ICOs. From what I've seen, initial coin offerings are securities offerings. They are interest in companies, much like stocks and bonds, under a new label. Promoters use the term coin based on the fact that the security being offered is represented by a digital entry or coin on an electronic ledger, as compared with a stock certificate and a related entry in a company's records. You can call it a coin, but if it functions as a security, it is a security. Also importantly, an ICO may have nothing to do with distributed ledger technology beyond the coin itself. Buying an ICO does not mean you are investing in blockchain-related ventures. There are many problems with the way cryptocurrency and ICO markets are operating, but two are worth particular attention. First, the markets for these products have substantially less oversight than our traditional securities markets. To be blunt, if you are trading cryptocurrencies on a platform that looks like a stock exchange, do not take any comfort from that look. Our stock exchanges have extensive rule sets, and they are required to conduct surveillance. Also, broker-dealers who facilitate securities trading have capital and conduct requirements. These requirements, and others, without a doubt, are necessary to protect those markets and our investors. Second, many ICOs are being conducted illegally. Their promoters and other participants are not following our securities laws. Some say this is because the law is not clear. I do not buy that for a moment. The analysis is simple. Are you offering a security? If so, you have a choice. Follow our private placement rules or conduct a public offering registered with the SEC. A note for professionals in these markets. Those who engage in semantic gymnastics or elaborate structuring exercises in an effort to avoid having a coin be a security are squarely within the crosshairs of our enforcement division. So what are we doing about these problems? I look forward to discussing with you that question in more detail, but we'll start with a comment on jurisdiction and a comment on enforcement. We, the SEC and the CFTC, do not have direct jurisdiction over the popular markets that trade true cryptocurrencies. This is not an oversight. It is the result of a new product and market. The traditional currency markets did not need direct regulation by market regulators such as the SEC or the CFTC. They are sovereign-backed and regulated with a long history. Cryptocurrencies, on the other hand, have no sovereign backing or oversight, and again, to be blunt, are currently functioning as assets for trading and investment much more than as mediums for exchange. Please do not view this description as a request for expanded SEC jurisdiction. If asked, we will work with other regulators to evaluate and address this issue, including our friends at the Fed, our friends at the CFTC, and the state regulators. They all have a keen interest in this market. I'll close, I know my time is short. To the extent that digital assets like ICOs are securities, and I believe every ICO I've seen is a security, we have jurisdiction and our federal securities laws apply. We will enforce these laws. Many of these laws also include private rights of action. We are working with the DOJ and other regulators to enforce these laws. Thank you for your opportunity to testify before you today. Thank you for the opportunity to testify before you today, and I stand ready to work with Congress on these issues and look forward to your questions.
Thank you, Chairman Clayton. Chairman Giancarlo.
Thank you, Chairman Crapo, Ranking Member Brown, and distinguished members of the committee. I've submitted a written statement for the record that details the CFTC's work and authority over virtual currencies. But with your permission, I'd like to begin briefly with a slightly different perspective, and that is as a dad. I'm the father of 3 college-age children, a senior, a junior, and a freshman. During their high school years, we tried to interest them in financial markets. My wife and I set up small brokerage accounts with a few $100s that they could use to buy stocks. Yet other than my youngest son, who owns shares in a video game company, we haven't been able to pique their interest in the stock market. I guess they're not much different than most kids their age. Well, something changed in the last year. Suddenly, they were all talking about Bitcoin. They were asking me what I thought and should they buy it. One of their older cousins, who owns Bitcoin, was telling them about it, and they got all excited. And I imagine that maybe members of this committee may have had some similar experiences in their own families of late. It strikes me that we owe it to this new generation to respect their enthusiasm about virtual currencies with a thoughtful and balanced response, not a dismissive one. And yet we must crack down hard on those who try to abuse their enthusiasm with fraud and manipulation. And we must thoroughly educate ourselves and the public about this new innovation, and we must make good policy choices and put in place sound regulatory frameworks to reduce risks for consumers. Putting my CFTC hat back on, I suggest that the right regulatory response to virtual currencies has at least several elements. And the first is to learn everything we can. At the CFTC, we've launched a new initiative called Lab CFTC to engage with these innovators and inform the agency about virtual currencies and other financial technology. Next is to put things in perspective. As of 8 a.m. this morning, the total value of all outstanding Bitcoin is about $113 billion. We have a slightly different figure than you have, Chairman, but close. But the point is that that's less than the market cap of one large publicly traded company, McDonald's. The total value of all virtual currency in the world is around $313 billion.
In comparison, global money supply is around 7.6 trillion. And because Bitcoin is sometimes compared to gold as an investment asset, the value of all the gold in the world is around 8 trillion, which dwarfs the size of the virtual currency market. The next task is to tell the public what we learn and educate consumers. There's a lot of noise around virtual currency, and regulators must help set the record straight. The CFTC has produced a large amount of consumer education materials on virtual currencies, including written statements, podcasts, webinars, and a dedicated Bitcoin website. We've even scheduled visits to libraries and briefings for seniors. We've never conducted this much outreach for any other financial product. Another element is regulatory coordination. Because no one agency has direct authority over virtual currencies, we have to work together. That includes us, the SEC, the Fed, the IRS, the Treasury's FinCEN network, and even state banking officials. And the next element is to exercise our legal authority over derivatives on virtual currencies while clarifying our statutory limitations. To be clear, the CFTC does not regulate the dozens of virtual currency trading platforms here and abroad. We cannot require them to meet requirements like trade reporting and market surveillance, standards for conduct, capital requirements, or even cyber protections or platform safeguards. But these are all standard regulations in the futures markets we oversee. Yet through our authority over commodity derivative markets, we do have enforcement power over spot coin markets. And with newly launched Bitcoin futures, the CFTC can now obtain trading data and analyze it for fraud and manipulation in 5 underlying spot markets. And that leads to the final element, and that is tough enforcement. Led by the CFTC's Virtual Currency Enforcement Task Force, we've launched several civil actions over the past few weeks, cracking down on fraudsters and manipulators, and more will follow. In closing, I want to quote something that Chairman Clayton and I wrote recently in the Wall Street Journal. These markets are new, evolving, and international. They require us to be nimble and forward-looking and coordinated with state, federal, and international colleagues and engage with important stakeholders, including Congress. I'm glad to be with you today, and I hope my kids are listening. Thank you very much.
Thank you, Chairman Giancarlo, and I'll begin the questioning. First, I will say I've had those dinner conversations with my own children, and you're right. This is an incredibly interesting but growing new area of financial challenge, particularly among at least my children and yours. Both of you have said in one way or another that neither of your agencies have complete jurisdiction over cryptocurrencies. The question I have is whether you have sufficient jurisdiction. And I'd like both of you to address that question. Should Congress address revising and refining our financial law so that one agency or a group of agencies have complete jurisdiction? Or if you look at the jurisdiction of all agencies today, do we have sufficient jurisdiction in place today? Chairman Clayton?
Well, thank you. And in my position, you're always cautious about speaking for other agencies, so I thank you.
Understood.
For saying that we should all come to be very direct, we should all come together, the federal banking regulators, CFTC, the SEC, there are states involved as well, and have a coordinated plan for dealing with the virtual currency trading market. I think our Main Street investors look at these virtual currency trading platforms and assume that they are regulated in the same way that a stock exchange is regulated. And as I said, it's far from that. And I think we should address that issue.
So am I hearing you say that you don't think we need to have additional legislative authorities?
I think we may. I think we may.
So first you should get together and tell us what you can and can't do, and then advise us.
I think that's a very good way to put it, Senator.
Chairman Giancarlo?
I think that's exactly right. I think the first step is to recognize where the gap is. So there is, as we both said in different ways, what we call the spot market for Bitcoin is not a regulated marketplace. Now, for us at the CFTC, we're familiar with that because we generally don't have regulatory supervision over the spot markets for which derivatives apply. That is a longstanding basis. We regulate derivative markets, the underlying markets we surveil, and we that might kids that are underlying.
Reduced. State these assertions. traditional regulation, such as
wife and I such accounts with we must first is to learn everything we can. other than my including written.
These have nothing. Professionals.
Watching this, I just want to interject something really profound that he just said. That he got into the cell phone market when it was a really small market. People thought that he was crazy wasting his money, and he ended up getting rich. You go back to the .com, which was after that, it was the same situation. People lost money, but the investing in the right things at the right time produced major prosperity for many people. And this is what we're looking at right now. People are dismissing it. People like Warren Buffett, who also dismissed the internet as was it pixie dust or something like that. But he and also technology stocks as well. He doesn't invest in them because he doesn't understand. Anyway, I'm just wanted to point that out. It was a pretty profound statement.
I'm not exactly sure what the right regime ought to be, but I would argue that, well, I commend the Treasury Secretary for putting a working group together. I would argue this is the reason we created FSOC in the first place, that this rises potentially to the level of a systemically relevant event. And I'd just be curious whether you believe, and I commend what both of you are trying to do, but whether this ought to elevate to an FSOC level analysis.
So, Senator, I had the same question you had, which is there's a big rise here. If it does keep going, is this a systemic issue? Which is one of the reasons we brought it up at FSOC, talked about it at FSOC. I again commend the Treasury Secretary for forming the working group. I want to go back to separating ICOs and cryptocurrencies. ICOs that are securities offerings, we should regulate them like we regulate securities offerings. End of story.
I'll make sure, because I've got a couple more points. Thank you, Senator. Just real quickly, on the issue of disclosure, sometimes what we're seeing is not a problem of absence of disclosure, it's false disclosure. And false disclosure is often fraud, and I think we need to step in there. But just in terms of discussion, as Chairman Clayton mentioned, we have begun discussions at FSOC. In addition, there's also been discussions led by Chairman Clayton at the Financial Stability Board, and also at IOSCO, which is the International Organization of Securities Commissioners. So these discussions are taking place at the right levels of debate, but there's so much more to be done.
But, and again, to my friend from Louisiana point, we've got this, we're focused on a lot on Bitcoin and crypto assets, cryptocurrencies, and I think there's even definitional issues here. But you've got a whole new platform called Ethereum where they're creating file sharing or extra computer time. I'm not sure what kind of assets those fall into. Are they potentially regulated within your realm, or if there is a trading exchange, a tokenization exchange between excess computer time? I'm not sure where that fits at this point.
The definition of a security, I believe, the people who wrote the 34 Act and the 33 Act, they were smart. They did it on a principled basis, and they basically said, if you're giving people money in exchange for a future development of a business with the hope of a return, and whether that return comes in the form of server time or your ability to sell server time, it's a security.
But there are been, and I concur with the approach you've taken in terms of the ICOs, and I think there's been some very bad behavior. Yet, certain ICOs, the SEC has not stopped, others they have stopped. And are you going to go back and re-review the ones that have gone forward?
Let me say another thing about the 33 and 34 Act. When they were written, there was a great recognition that there was a tremendous amount of securities activity in this country, and that we were going to rely on gatekeepers to help us enforce those, and liability to help us enforce those rules. Accountants, lawyers, underwriters, sellers, and the like. I'm counting on those people to do their job, and I've made that clear.
Let me ask Chairman Giancarlo, what we did, and one of the things I'm concerned about was that I think we may have moved too fast on allowing, for example, futures trading on Bitcoin. And I would just wonder, you've allowed future trading contracts on Bitcoin, yet the SEC has not allowed ETFs. I'm just worried that we need a much more coordinated effort, because I think the potential writ large amongst crypto assets and the underlying blockchain could be as transformational as wireless was years ago, and I think we're going to need a much more coordinated effort. I know my time's expired, but if you could both quickly comment on that, I appreciate it.
I believe it is critically important that we coordinate on this. I believe that we are all both individually and collectively understanding our authorities, understanding this new technology, working around it. There was a communication amongst myself, Chairman Clayton, the Treasury Secretary, and others in connection with Bitcoin futures. And Bitcoin futures are quite different than the Bitcoin market. The Bitcoin is an anonymous area. Bitcoin futures is fully transparent to the regulator. Bitcoin retail. Bitcoin futures mostly institutional and high net worth. Bitcoin futures regulated. Bitcoin futures regulated. Bitcoin unregulated. And with Bitcoin futures, we're now having visibility into underlying spot markets and data from those markets that we would not otherwise have.
Completely agree on coordination. Like I said, I break it down into 3 areas. There's this great technology that I agree with you has promise. There are these pure cryptocurrencies, which we need to take a look at across FinCEN, Treasury, CFTC, Fed, and then there are securities offerings that are called ICOs that should be undertaken as securities offerings, consistent with our regulatory regime.
Senator Cotton. Thank
Thank you. And thank you, gentlemen, for your appearance today. I want to continue on the line of questioning that Senator Warner began. So putting aside Bitcoin or other kinds of cryptocurrencies that are based on blockchain or distributed ledger technology, what are your thoughts on the potential value of that underlying technology of blockchain and distributed ledger technology, both to enterprises and consumers and perhaps to government agencies?
It's important to remember that if there were no Bitcoin, there would be no distributed ledger technology. It grew out of that technology initiative. And the potential applications, and by the way, I'm no pie in the sky dreamer. I just report what I read, but the applications range from enormous potential in financial services industry, in the banking industry, but right down to the way charity dollars are spent, the way perhaps refugees are accounted for across the globe. There was an article just this morning about the use of distributed ledger technology for 2.5 billion people around the world who don't have access to banking services. One of the areas that, in our own area of agriculture futures, 66 million tons of American soybeans were just handled through a blockchain transaction by the Dreyfus Company for sale to China. So Bitcoin is now being used. It's used in our American transportation logistics system. And most importantly, the potential of distributed ledger technology for regulators to be able to do really close market surveillance. And if it had been available in 2008, if we had been able to see the counterparty credit exposure of one bank to another bank in real time with precision, that would have enabled much more precise policy choices that had to be made in a rush without good data. So I think distributed ledger technology has got an enormous potential. Now, how it will be realized, when it will be realized, what are the other challenges in it, those we can't say, but the potential seems extraordinary.
Thank you. Mr. Clayton?
I agree that the potential seems very significant. And just look around anywhere in our economy where verification and record keeping has cost that is potentially reduced, is an opportunity for this technology. That's just one of them, and I hope people pursue it vigorously.
Thank you. Let's turn our attention now to cryptocurrency and to Bitcoin, since it's the most prominent. Yesterday, the Dow Jones had its single largest decline in a point scale, 4.6% as a percent, which is high, not the highest ever. That obviously generated a lot of news coverage. The dollar has faced 2% inflation or less now for many years. Bitcoin, however, has seen a 32,000% increase in its value over the last 5 years. It's declined by some 60%, I think, in just the last 30 days. What are the factors driving that kind of extreme price volatility in Bitcoin relative to securities of public traded companies or the US dollar?
Well, just recently, the volatility we've seen in Bitcoin was not as large as volatility we've seen in some other asset classes, such as the VIX product, which is known as the fear index, a volatility gauge. And so we have seen extraordinary volatility in Bitcoin, but in our world, in commodity derivatives, we're used to volatility in asset classes. And that's one of the things that the emergence of a futures product is meant to do, is to provide those who are exposed to that volatility a means of hedging and mitigating the risk to that volatility.
Mr. Clayton?
I don't really know what's driving the volatility in Bitcoin and cryptocurrencies. They're not correlated with sovereign currencies, so it must be something.
Okay, I didn't think that I was going to interject anymore here. Let me answer the question for the committee in terms of what is driving the volatility. You guys are driving the volatility! Okay. Regulation, banning, you guys are driving volatility. Okay. Please continue. Honorable J. Clayton.
And different from what would drive the dollar, but that's one of the issues before us. Is there does appear to be a lot of volatility compared to the medium they are supposed to be a substitute for.
You know, so what does that kind of volatility portend for cryptocurrency's future as a potential alternative to legal tender of nation states, or in the EU's case, a transnational organization?
You raise a great point. Now, maybe that volatility tamps down to a stable, but an asset that is highly volatile is not a very effective means of exchange, because you don't know how much you're getting by the time you receive it, or how much you're paying at the time you have to pay it. If you agree a price on day 1, but have to source it on day 10, you expose yourself to significant risk.
Thank you. My time has expired. I do want to associate myself with the remarks of Senator Donnelly at the end of his remarks about the risks that cryptocurrencies are currently posing as a way for rogue nations, terrorist organizations, criminal organizations to evade sanctions, not just in trading, but in hacking as well, as we've seen media reports from North Korea. So I'm glad to hear that you're working closely with our law enforcement and intelligence agencies, and I hope that continues. Thank you.
Senator Menendez.
Thank you, Mr. Chairman. Thank you to both, and it's good to welcome a fellow New Jerseyan in your role, Mr. Chairman. I have been actively following both Venezuela and Russia's interest in developing virtual currencies for the purposes of evading U.S. sanctions. Last month I sent a letter to Secretary Mnuchin on this subject, and I asked Undersecretary Mandelker about this a few weeks ago when she was here before the committee. Under what circumstances would the SEC and the CFTC have a role in engaging or regulating the proposed new petro or crypto ruble currencies? More broadly, does the SEC and CFTC have a role to play in preventing the use of digital currencies by foreign governments to evade U.S. sanctions?
Our jurisdiction would be very limited in that area, Senator. We have, as I've spoken about before, we do have enforcement authority for fraud and manipulation. And so if we thought that that instrument was being used for fraudulent purposes, manipulation purposes, we would not hesitate to take authority. But this, you're probably touching on an area where the jurisdictional lapse is probably greatest for the two agencies sitting before you today.
And so let me ask you, manipulation, what if you're manipulating to avoid U.S. sanctions?
You know, I'd have to speak to our enforcement counsel to see how that fits in, but we would certainly look at it, and if...
I'd like to have you do so, and I would love to hear back through the committee. Are you interacting with FinCEN to the extent that you may have limited jurisdiction? Are you adequately integrated into the financial regulatory network that watches for illicit activities, or are there gaps that could create vulnerabilities?
So as we mentioned before, Senator, Chairman Clayton and I are part of a virtual currency task force that is put together by the Treasury Secretary that includes the Fed and FinCEN. And we have already had our first meeting, beginning meeting to set out some work streams. We will have more to come. And it just so happens that I'm actually meeting with FinCEN's virtual currency team this week and on a previously scheduled meeting to get some introductory discussion started of cooperation between our agencies. And so I look forward to actually asking them this question as well.
Okay. And I would just say to both of you, to the extent that you have a role to play and you lack the present authorities to do so, I would love to know about that if you determine that is necessary, because
This ought to
Securities.